Welcome back to Gimme Some Truth. We have myself, Nate, Mitch, and Clint in the booth. We're going to be talking about liability. Do not turn the podcast off yet. We promise it'll be entertaining. I got to check in with Griff on where he's at on our new, intro music samples, because he's supposed to be getting us something.
A little concerned that he's really big into death metal, though, so it might go a little right turn for everybody.
I mean, just be aware. It's a more intense, if you will, sound.
A little slight assault on the ears.
It'll wake you up. So maybe we'll use it when we have kind of more boring topics. We'll have that just so everybody kind of gets.
Well, I'll try to make this somewhat more exciting. At first, when you kicked off the intro talking about liability and Griff, my mind instantly went to his new hobby of chopping down trees on your property with an axe.
Yeah.
And I thought somehow that was going to be incorporated into the discussion on liability.
No, he's enjoying the land. We're all enjoying. We bought some property in January, and it's been good for everybody. Everybody's found a way to enjoy it. So awesome. That's a good lead in. So let's talk about liability. And the reason why we're on this topic today is because we've seen a couple instances recently with people where they aren't where they should be by way of their liability coverage in their lives, and it's obviously not the most enjoyable topic to discuss just in general. I think that's why people kind of lose sight of it.
Well, I think you're just talking around me when you're talking about me, because I told you that I am not covered to where I should be at. And I
thought that was somebody else that you had.
No, that was a me.
Oh, that was
a me. I have a call right now. I have a voicemail on my phone because, the story was I got my renewal, just the regular, renewal from my agent or whatever, property casualty.
Yep.
And I looked at it and I was like, you know what? I'm trying to think about this. And I know that if something happens to my house, and we had a house in our neighborhood that burned down, total loss.
Wow.
And everyone was safe, thank God. But one of the situations was total loss of the dwelling. And with real estate property prices going up here,
right?
Many people aren't covered. So if your house burns down, the insurance company will be like, well, yeah, you're covered for whatever it is. So if you have say you have a $500,000 house.
Right.
$500,000 house that's now worth $650 because the market's gone up.
Yep.
Okay. Your house burns to the ground. Guess what you get? $500.
Yeah. And the cost it takes to replace it, right?
Right.
The cost to actually build something back up again have gone up quite significantly.
Yeah. Let's unpack that a little bit. And this is going to get me dangerously close. Clint's the chief compliance officer, so he's going to have to tackle me if I get too close to the edge here. Although I was a licensed P&C. I had my PC license for a while. When I was at Wells Fargo. So when you're dealing with...
Do you love a little PC on top of those subprime mortgages you're rocking, or what?
They weren't all subprime. They were that was the flavor of the day. That's what you did back then. So when it comes to replacement cost on insurance, right? The land itself does not really get damaged if, in your example, a house burns down, right? And so typically what happens is they will cover what's called the dwelling. And they say that specifically because they're talking about the structure that sits on the land, not the land, right? Now, if you have a piece of land that has other value by way of, trees that could be, forested or whatever it might. Is that even the right word? Forested? No, it's whatever that word is when you can sell logged. Thank you. If that's the case, or if you have some other, maybe you have exterior buildings or something like that have value. But typically, if you're talking about a city property, you're going to have the land and then you're going to have the dwelling. And the dwelling is what you want to make sure is covered enough, to your point, Clint, which is, if it burns down and it's not covered where it should be, you are going to have a problem.
That's exactly right.
And so potentially a mortgage that's not paid off then.
Right. You're on the hook. You got to pay your mortgage.
Right.
They don't care that your house doesn't exist anymore.
Right.
Which is a problem for many people if you had to pay that and then also try to reconstruct your house.
And Mitch just bought a house.
I did. We haven't closed yet.
In the process.
But yes, accepted offer. And we're in June here during this recording. So in July, middle of July.
And I bring that up because that's the time when most people look at this stuff, right? This is when they care, they get involved. But
I'm already engaged with my insurance guy.
Sure.
My P&C guy. And And sometimes too, this actually presents opportunity. Not only do you want the correct coverage too, but I'm working with a guy that can shop it out to different carriers is what I'm trying to say here. And so I used to have an auto policy separate, somewhere else. And that's related to an accident that I had a few years ago. I was at fault. Have we ever told the Dodge Ram story?
Oh, man.
No,
Danny, have you heard
How much of a tangent do I want to go here?
Go ahead.
Maybe I'll make my point and then I'll go to the tangent. So the point is it gives an opportunity to shop around too and then maybe rebundle some policy. Right. So home, auto, umbrella basically is in like a jewelry policy and stuff like that. But essentially it gave me an opportunity for my guy to go out and shop it for me too and actually get some competitive pricing. So, all right, Dodge Ram story.
Yeah. So great.
Let's see. This is I started at Walkner Condon in 2018, I want to say. So I want to say this is 2018 timeframe. And my Toyota Highlander at the time got totaled. That was not my fault.
Okay.
And by the way, this came to light recently because I'm going through this process with my PNC guy, right? And then I got a rental car to drive something while I was shopping for a new car at the time. And I saw the distance between the claims was 7 days. So the first one, again, not my fault, car totaled. Second one, I'm driving this Dodge Ram. And at the time when I go to Hertz or Enterprise, wherever it was, I just showed up and like, I get a car or whatever. And they're like, oh, well, do you want to upgrade? I'm like, well, what are we talking here? And they're like, do you want a truck? Yes. Yes, I do. Turns out the truck was way more manly than I am because I didn't know how to drive it. So then I think it was Clint's birthday rolls around and it was raining. So I decided to park in our tiny little space outside of our office there with these big columns that, it's kind of meant for compact cars, not a Ram.
Concrete pillars.
Yeah.
Yes. And I decided to park there because it was raining, brought in the donuts. And then I was slowly but very surely backing out and just scraped the entire side. That's the other problem. New cars have these huge rear view cameras. And I didn't look around the car at all. I solely was looking at the rear view camera because it was so big. I'm like, I'm not going to miss anything. And I'm just slowly scraping the entire side of the rental car all the way back. So as I was shopping around just recently, as I'm rebundling my insurance, I was reminded that I am not man enough to drive a Ram, apparently. I can't handle it.
I have to say one thing, too. Last time I ever got any donuts from Mitch on my birthday.
Oh, yeah, you're never getting donuts again.
Well, right. I was going to say association there.
I know.
There's no way that's happening.
No way. Somebody else is going to have to bring me donuts.
Right.
It was nice of you. The donuts were delicious.
Right. Well, we bring up the Mitch buying a house because I think unfortunately what happens is that we only think about these things at times like that, right? We buy a house, we buy a new car, we do something along those lines, and then it's, that's right, I should check with my insurance, and so the complacency of that strategy of only doing it during those kind of life events leads to undercoverage, right? And therefore creates liability.
That's right. There's two different things at bay here. Number one, a lot of people have seen significant appreciation in their house, so you have to address it now.
Right.
You have to address it again.
Right.
You have to call your agent and check into this. And yes, I mean, the process kind of stinks, but you should really make sure that your whole entire house is covered. It's one of our largest assets that we all have.
Right.
And it has liability matched up to the asset, right? So, we need to have protection there for sure. And then secondarily, a lot of people have done home improvements over the last few years too. If you've stayed in your home, so you've had a significant price appreciation and you've had perhaps a home improvement that has added value to your home as well. And so as a result of that, you have to go and call your agent and be like, hey, look, I have to look in this, or shop. It's a great onus to go, hey, let's shop coverage. If you have somebody that, you're not enamored with your PNC or just seeing what's out there. And then the next conversation on top of that is, what's your own personal liability? And so I'll let you guys kind of speak to that about the importance of having personal liability and why you would want to consider that. And so, Mitch, why would you want to consider adding some additional coverage, or what's commonly known as umbrella coverage, on top of what you have with your PNC, just your regular auto insurance?
Yeah, and you can, your auto insurance has some embedded liability coverage in it, and even your homeowner's does, as far as if something were to happen on your property, let's say, and but those have limits, right? So an umbrella can kind of be a little bit more of a catch-all, or at least protect you up to higher limits than you might individually get from your auto policy or individually just from the homeowners itself. And it's usually pretty inexpensive to add on an umbrella policy. Yeah. Just wrap it together more or less with your agent. And of course there'll be some additional premium, right? Because you're expanding your coverage, but you might get millions of dollars more of liability coverage in some cases compared to what you're already covered for. And another thing too to think about is if you are running some sort of, this could get tangential into the business side, but if you're running maybe a business from home or working from home, or in my case, I'm a household employer, I have a nanny that comes into my home, right? There's certain scenarios where if something were to happen to my nanny, some of my typical coverage might not cover that, right? So an example, she falls off the stairs on the back deck or something and breaks her leg and comes back and is looking for some sort of compensation, right? That's a scenario that, well, I might not be covered. And two, then there's other sorts of insurances that could actually come into place too when it comes to that case where, if you're looking at a workers' comp policy or something like that. So this liability discussion is a lot more than just, what happens if my house burns down.
Right.
There's a lot more different things that we're talking about. Liability is kind of this, no pun intended, umbrella word, right? That we kicked off the podcast with.
Yeah, and speaking to umbrella policies in general, I mean, I think the idea of shopping your coverage is almost an annual, maybe not annually, but for sure every 2 years you should be looking at doing this, because there potentially is cost savings within your policy that you're not aware of. Maybe the insurance company came out with a new bundle program or package or something like that, and maybe that umbrella policy doesn't cost you any more money because the savings that you potentially get on your existing coverage might pay for an umbrella policy or something along those lines. But I think that the idea of the proper amount of coverage is really where this conversation goes, and the understanding that changes, right? So the target is moving, the goalposts are moving as your life changes, and so if you're not changing your coverage as your life changes, then you potentially are properly covered for your life 4 years ago.
Yeah,
but not your life today.
Inflation's had an impact on this too. We have to understand, hey, we have inflation right now, and $1 million isn't what $1 million used to be 10 years ago due to inflation and also due to other factors. So, if you get sued, $1 million might not be enough coverage anymore for you to do this umbrella policy. Oftentimes it's like, hey, if I got $1 million, I'm fine. No, I don't know about that.
Right.
You got to have a conversation with your agent to get more specific to your own situation, because the more your assets grow, the more you want to protect. And, the deeper your pockets that you have, if you get into a liability situation where you could be found liable for something, that could be a catastrophic thing for you financially, and all these assets that you've, accrued over your lifetime may be at risk. So we want to make sure that we put up enough, guardrails and walls around all of our assets that people can't get into them. And so those are key things as we discuss how much coverage and what style of coverage you have. And again, that's about having a conversation with your financial advisor, and then also having a conversation in addition to that with your property and casualty agent. Yeah,
and I'll say a dovetail on that. If your agent is not consultative, right? If you don't feel that your agent is the kind of the coach, if you will, that they should be, then you need to find a different agent, right? Yes, these are kind of product oriented things, but if you feel like you are buying a product in a transaction, you need to find a different agent, because these are people that need to understand your situation specifically and how that situation relates to your coverages, to your level of risk acceptance, right? And really understand what you're trying to accomplish. And if that's not what you're getting, then you need to find a different agent, because in today's world, you're paying for these things whether you realize it or not. And so if you're not getting the service that you feel like you should be getting, you're shortchanging yourself. Danny's doing technical adjustments here while we're doing the podcast. I'm not sure what's happening here.
That's exactly right. He's good. And what I'm going to say is this. I think we're going to end the podcast right here, because what I want everybody on, that's listening to this to do right now is send an email to your agent.
Ooh, call to action. I like
call to action.
A call to action.
Go send an email to your agent now.
Yes.
Stop listening to us.
Yep.
Go send an email to your agent and get that ball rolling and make sure that you have a coverage review.
Yes. Say, I want to do a coverage/liability review of my policies.
That's great. So go do that. You have marching orders from us, and then, hey, send us an email and be like, hey, I did that, and my coverage is great. Thanks a lot, Nate, Clint, and Mitch. Appreciate that.
And Dan.
And Dan.
And Dan.
Thank you for joining us for another episode of Gimme Some Truth.
Walkner Condon Financial Advisors is a registered investment advisor with the SEC. Registration with the SEC does not imply a certain level of skill or training. The opinions expressed by the participants of this podcast are their own and do not reflect the opinions of Walkner Condon Financial Advisors. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Thanks for listening, and for further information, please visit WalknerCondon.com.